Ticker symbol O or Realty Income has been far from perfect over the last year or so, year to date down around 20.71% as far as share price. But I promise when it comes to the monthly paying dividend stock, ticker symbol O, it's not all bad. And in this video, I'm going to explain the 3 best reasons on why Realty Income is a great buy at these levels and why ticker symbol O is the best REIT across the board. Now stick around, drop a like down below, and subscribe for more future content like this, and let's get into it. So let's start off with reason number 1. Realty Income has a nice big starting dividend yield, especially as the price has been beat up. The starting dividend yield has just went up and up and up, now around 6.07% starting. But to be fair, there's plenty of other REITs, stocks, and ETFs across the market that offer 6% or even higher starting dividend yields, but very few have the dividend safety as an 80 safety score, according to Simply Safe Dividends. Now, Simply Safe Dividends just as recently as September reaffirmed that Realty Income is an 80 safe score, which is relatively very safe compared to a lot of the other ratings when it comes to Simply Safe Dividends. They said Realty Income has underperformed several retail REITs in its recent months in part of concerns over the firm's continued foray into the gambling industry with roughly a $1 billion investment in the Bellagio, one of Las Vegas' crown jewels, to assume 22% stake in the casino. And it was pretty much ever since Realty Income announced that they were going to invest partially in the Bellagio, along with, of course, the recent interest rate hikes and the unsure future ahead when it comes to interest rates, which has made some more short-term Realty Income investors very unsure. But also, Simply Safe says the REIT first dipped its toes into gambling last year when it sealed a $1.7 billion lease buyback with Wynn Resorts for the Encore Boston Harbor Casino and luxury hotel. But given Realty Income's historical conservative portfolio that has resulted in annual payout growth since it went public back in 1994, these investments mark a stark departure from the REIT's traditionally less flashy tenant base. So I think partially the problem with Realty Income investing in some of these more casino, more flashy, more luxury type of tenants, etc. I think that the fact that it's so different from some of the past tenants, companies like Dollar General, 7-Eleven, a lot of these more like boring recession-proof companies that Realty Income has mostly had as top 20 clients or so. And just sort of the unsure nature about casinos. I mean, casinos are definitely moneymakers, but again, it's just different than Realty Income's normal client diversification. But Simply Safe Dividends also said, because of the most A- rated property owners, tenants have a recession-resistant qualities and are better suited to combat the rise of internet retailers. Worries over Realty Income's casino investments may be overblown. So reason number 1, Realty Income has a very safe dividend as an 80 dividend score according to Simply Safe Dividends. Now, when it comes to buying Realty Income as of right now, reason number 2 on why I think Realty Income is an absolute smash buy and why I've been buying Realty Income almost on a daily basis over the last few months, even on the super red days. This is the next reason. Realty Income is very well diversified. These are the top 10 industries when it comes to this REIT. And this is also why this is my favorite sleep well at night REIT. Just to backtrack, keep in mind, Realty Income has around 13,000, probably close to almost 14,000 at this point, commercial properties that are leased to 1,300 different clients. So that's very key here. 1,300 different clients who operate in different industries throughout places like the United States, as well as other places. So keep that in mind. Across any other REITs in the entire stock market, Realty Income's top 10 industries, things like convenience stores, grocery stores, dollar stores, just those top 3 make up the majority of the REIT's portfolio. And these are recession resilient industries. And the tenants that make up these industries in Realty Income's portfolio are going to be around for the long term, in my opinion. Also, things like home improvement stores, as busy as ever. Drugstores, also very important. Then towards the lower end of the top 10 industries, we have things like restaurants, health and fitness, automotive, and general merchandise, which I'm not necessarily as bullish on, but still I think they're going to be just fine. So reason number 2 on why I'm extremely bullish on Realty Income as it sits as of right now is because the top 10 industries are recession proof. And even in the next year, if we see a recession, if it gets bad, I think these tenants are going to be around and are going to make it through. And looking at Realty Income's portfolio occupancy, that's happened pretty much every single time in the past. Looking back in 2008 when things got really bad, especially with commercial real estate, Realty Income still had a portfolio occupancy of around 96 to 97% on the low end of things, which is extremely bullish in my opinion. Now, the last and final reason on why I think Realty Income is a smash buy at these current levels and how I'm able to sleep well at night holding onto so many shares of Realty Income is because the majority of Realty Income's debt is fixed. Take a look at this. If we look right here, this is a screenshot from a debt summary as of June 30th, 2023. This is from Realty Income's last earnings report. This is their current debt summary. So this gives us kind of an idea of where Realty Income is at as far as debt goes. So if we look through the list right here of all the credit facilities, unsecured term loans to senior unsecured notes and bonds and the mortgage payable, everything is broken down specifically. Total consolidated debt principal, $19.5 billion. Now out of this, there's a fixed portion and a variable portion. The fixed portion is going to be good. That means that the rate was fixed in before interest rates skyrocketed. And out of the entire debt that Realty Income has, at least as of the last earnings report, 92% of it is fixed, where only 8% of it is on variable. Now, even though 8% being on variable is not necessarily ideal because of course those are going to be much higher interest than of course the fixed. But looking at the debt summary, this gives you more of an idea of what Realty Income is working with when it comes to debt. Now, on top of the fact that the majority of Realty Income's debt is fixed, interest rate hikes from here, according to the Fed rate monitoring tool, are going to hopefully soon be a thing of the past, as there is a high likelihood by next November that interest rates are going to be back down to say 4.5 to 4.75%, which is quite a drop, which is going to make the REITs flourish in my opinion. So there we have it. Those are 3 good reasons on why I think Realty Income stock is not only a smash buy on where it's trading currently right now for long-term investors that are willing to weather the storm and are not going to be scared on little red days, but also the fact that Realty Income, just like the rest of the real estate sector, is going to see a massive bump if and when rates get cut sometime over the next 12 or 24 months. Now, if you're an investor that doesn't have a long time frame ahead of them, then maybe investing into REITs as of right now is not necessarily the best idea. But for an investor like me that doesn't necessarily need the money in the next year after that, but wants to load up on high quality stocks over the next say 10 or 20 years, Realty Income could be an awesome opportunity, and that's why I've been buying it like crazy. But speaking of Realty Income, they did actually have another dividend raise as of recently, up to 25.6 cents per share, the most recent monthly dividend raise from Realty Income, which is going to be paid out in October. Now, this is obviously impressive considering the situation the market is going through right now, especially the REIT sector with interest rates and everything else, but also impressive because Realty Income over the past year and a half has really been increasing their dividend a little bit faster, making Realty Income's 5-year dividend growth rate around 3%, which again isn't insanely fast, but considering it's been consistent and considering Realty Income pays a monthly dividend, I honestly have been very happy with it. Now, another thing that we have to talk about when it comes to Realty Income is this right here. The amount of shares that are outstanding for Realty Income over the past 24 months has been skyrocketing. Looking in 2021, Realty Income had around 415 million shares outstanding. Then in 2022, 612 million shares outstanding. And now as of the last 12 months, around 647 or even more shares outstanding, which is concerning to some Realty Income investors. Now, when it comes to REITs, obviously there's going to be times where they issue more shares in order to fund things like property acquisitions that are of course going to help Realty Income generate more cash flow and pay more dividends to investors like you and I. But that being said, at the rate that Realty Income is issuing more shares, obviously some investors are a little bit concerned about dilution and concerned that Realty Income might be getting over their head with how many new acquisitions they've been going after in the last few years. But now I want to hear from you guys down below when it comes to the monthly paying dividend stock. I want to know if you're currently buying Realty Income at these levels. Let us know yes or no in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.